Hey, hello investors and future investors. Welcome back to the channel. For today's video, I'm going to show you how to grow your small account exponentially using one simple option strategy. Now, if you're trying to make some extra income on the side to supplement your 9 to 5, or you're trying to go into options full time, then this is the right video for you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income and how you could do the same with your account. For today's video, we're going to be doing one simple option strategy that literally takes less than 2 minutes of your time in order for you to grow your small account exponentially. That option strategy is going to be none other than selling cash secured puts. Now, it looks like a very simple option strategy, but there is a lot that goes into it. I will give you the complete walkthrough and show you the ups and downs of doing this strategy and how you could use it over and over again to grow your small account. So, without further ado, let's go ahead and get down and dirty with options. So, our stock for today is going to be none other than SoFi Technologies, ticker SOFI. Okay, so here we are on SoFi, and we're going to go ahead and get straight into the option chain. And in order to do that, we need to go to Trade SoFi Options. Now that we're here with the Trade SoFi Options, what you want to do is that you want to go to Sell and you want to go to Put. Once you've done that, then you're going to go ahead and choose an appropriate strike date that matches with your risk tolerance. And I will explain that as well in this video. So we're going to go ahead and we're going to choose January 10th, which gives us 14 days out. Now, the reason I am choosing January 10th is because of my personal risk tolerance. So let's do a quick recap before we continue. So what you're going to be doing on a regular basis to continue making consistent income and to grow your small account is that you're going to be going to sell, put, and then choosing your strike date. Once you've done that, then you're going to go ahead and choose your strike price below the current share price. Now, as you can see here, the current share price is at 1601. Now, as of making this video, the stock market is open, so this is going to fluctuate just a tad. So now we're going to go down and we're going to choose our strike price. As you can see, strike price is right here. Now, I will be going with the 15.5 strike price. And for that, that's going to give me a 69% chance of profitability. Now, I'm pretty sure you guys are accustomed to me going with the 80% chance of profitability. I have changed that up because SoFi is a very good stock. I do not mind owning it in my portfolio. Now, with the 15.5 strike price and a 69% chance of profitability, I will be paid 0.52 or $52. We're going to go ahead to continue. We're going to select the amount of contracts we want. Let's go with one and voila. So once I do this option strategy, I will be receiving $52 and that goes directly into my buying power. Now, here's the kicker. Here's how you continue to make consistent income. That $52 is yours to keep no matter how the trade goes. This is what's going to allow you to grow your account consistently over time. Now, this strategy works particularly well if you're trading with a small account. And the reason for that, this is a very affordable stock. Now, in order to do a cash secured put, you will have to leave collateral. Your collateral is going to be in the form of cash. So, how much collateral would you need to leave, you ask? Well, that's quite simple. Your collateral is going to be the strike price you chose, which is 15.5, and you're going to multiply that by 100 shares. Remember, each option contract is multiplied by 100 shares. So the amount of cash you're going to have to leave is going to be $1,550. Now, let's say your portfolio is a bit smaller than that, then feel free to go down to a smaller price, something that you could afford. And that right there is the cash secured put. Now, let's go ahead to how you win this trade or how you not so win this trade. I always refer to this option strategy as a win-win option strategy, and I will show you why that's so right now. So, first of all, if you get any value from this video, feel free to go ahead, like the video, subscribe to the channel, and hit that notification bell so you get an alert whenever I post a video, and I do post very frequently. Now, how do you win this trade or how do you not so win this trade? Well, let's go into that right now. So, come expiration date of January 10th, if SoFi is trading at any price above the 15.5, then we get to keep our $52. Remember, the premium you receive, the $52, is yours to keep no matter how the trade goes. However, now your collateral of $15.50 is now going to be released back to you And now you could do the trade again. Hence, you could keep doing this to grow your portfolio. But there's another way this trade could go. So once again, come expiration date of January 10th. If SoFi is traded at any price above the 15.5 price, then once again, I know you know the answer to this. You keep your premium. That's what makes this strategy so good and able to grow your portfolio exponentially. So now you keep your premium. However, you do not get back your cash. Now you're forced to buy 100 shares of the stock. The good thing is that you keep your premium and you now get the stock at a reduced price. Remember, when you did the cash secured put, the price is going to be about $16. However, when you are assigned meaning you're forced to buy 100 shares, you're going to get it at a much lower price. Hence, this is a win-win option strategy. So your next question is going to be, if you are assigned, how are you going to continue to grow your portfolio after assignment? Well, there's a second option strategy, which is known as the covered call option strategy. I'm not going to get into that right now. This video is going to be focused solely on selling cash secured puts in order to grow your account. But however, when you do get assigned, consider doing a covered call option strategy. And that too is going to allow you to make additional income. Remember, on this channel, we are income option traders, meaning every option strategy we get into leads to us getting some kind of premium in order to grow our portfolio. So it would be remiss of me to tell you the downside of this strategy. There's one particular downside of this strategy, and that's if you choose the wrong stock. So remember, always do your own due diligence before investing. Make sure you choose a stock you do not mind owning in your portfolio. So there you have it. If you're looking to grow your small account exponentially, consider using the cash secured put as one simple option strategy to help grow a small account. Once again, you do not need a large account in order to perform this option strategy. Now, what's going to happen if you do have a big account? Well, that's quite simple as well. You have two options. If you do have a bigger account, consider increasing your amount of contracts. That too is going to increase your premium. Another way you can go if you do have a big account is to also reduce your chance of profitability, and that too is going to increase your premium. So for instance, if I were to do the $16 strike price, my chance of profitability is going to be reduced to 63%. In turn, the amount of money I will receive is going to be higher now. Now it's going to be 0.76. Once again, please do your own due diligence and know the risk and rewards of entering any trade. Also, before you enter any trade, make sure you have an exit strategy. Now, I'm curious to know, is the cash secured put something that you would consider using in your portfolio in order to grow it exponentially? Let me know in the comments below. Now, until the next video, keep pushing your investments.